Good morning, everyone, and welcome to the European crossover webinar. And take a look here. Bear with me one moment. Well, we've seen the euro continue to go on and pair back. Let's go and move this to the daily. So we have continued to go slide back. I think we're actually coming right into where we had our buy chart support for today. I believe could be a little bit lower, but continue to pair back. Dollars added a little bit more here. It's here. I think the dollar was, I think we did have that 91.20. I think we kept that the same still. And take a look what we started with cable. Coming right in here, I believe we had our support right here for cable. Right here, just going with the technicals. We had that for support. We are seeing indices pair back a bit also after the wild run-up. Seeing pretty good little dip back in here. As you dipped into, you can see right here into the two-day VWAP. And as we discussed yesterday, I thought that we were going to move higher. And while I was saying wanted to go and wait until we got into the U.S. session, but as much as I thought it was going to go high, I didn't think it was going to go this high. I knew there was a possibility to go at least maybe even to here, but even then I didn't think it'd get there all in one day. But we certainly did make that move and push it into here, and finally got all the way up into 327. We had a a POC right there. Finally kind of stalled out and we started to pair back. We've continued to pair back a little bit further here. Take a look at ES. Going to pair back here also. And let's take a look at what we got on tap for today. We just got the German unemployment data that came out, change of 9,000. And at the top of this next hour, we do have European HICP flash. And nothing for here in the States. Actually, you know what? No, wrong. We do have ISM, New York Index and Business Conditions at 9:45 Eastern. And we do have Canadian GDP. And New Zealand dairy prices are going to come out. And let's go on and take a look at the news. Australian dollar retreats as the RBA reaffirms easy policy and ramps up bond buying. The Aussie dollar eased on Tuesday as the central bank sought to calm nervous bond markets by recommitting a pledge to keep buying bonds and reassuring that faster growth will not lead to an early tightening cycle, I meant to say. The Aussie was 12 tenths lower at 77.60. At midday on Tuesday, down from the 80.07 from a few days ago. The current monetary policy settings are continuing to help the economy by keeping financing costs very low, contributing to a lower exchange rate than otherwise, and supporting the supply of credit in household and business balance sheets, the RBA said in a statement. It remains committed to maintain a highly supportive monetary conditions until its goals are achieved, and will increase the cash rate and rates until cash inflation is sustainably within a 2 to 3% target range. Aussie 10-year bond yields, which had spiked to a high of 1.97% on Friday on the bets of a rate hike as early as next year before pulling back on Monday. We're 2 basis points higher at 1.69. Last week's dramatic sell-off in bonds, which sent 3-year yields as high as 1.88 and threatened to shake up the RBA's target of 10 basis points, prompted an aggressive response from the central bank. It made a $3 billion bond buying offer last Friday. While economic conditions have improved in Australia from a more successful response against COVID pandemic compared to its peers overseas, the policymakers worry that the speed of the yield rises could derail the recovery. The bank remains committed to the 3-year yield target and recently purchased bonds to support the target and continue to do so as necessary, said RBA Governor Philip Lowe. In New Zealand, which has successfully controlled the spread of the virus, the Kiwi dollar was lower at 72.50, and New Zealand Central Bank said it was in no rush to tighten monetary policy. On to the dollar. The dollar holds advantage over low yielders and risk currencies slip back. The dollar stood firm against its lower yielding peers on Tuesday on bets of a faster economic recovery in the U.S. and expectations that the U.S. Federal Reserve will show greater tolerance of higher bond yields other than central banks. Risk-sensitive currencies stepped back from a sharp gains from the previous day as China's top financial regulator discussed they needed to be proactively taking measures to stabilize the housing market, and while expressing wariness of the risk of bubbles bursting in foreign markets. The U.S. currency rose to as high as 693 on the yen, its highest in late August, and last stood at 678. The jury's still out on whether the bond market sell-off is over, but people expect the Bank of Japan to keep tabs on bond yields, which means there'll be bigger yield premium for the dollar. The euro was under pressure as top officials from the ECB sounded an alarm over the rise in bond yields. Lagarde said the ECB will prevent a premature increase in borrowing costs to firms and households. Policymakers Francois Villeroy was even more explicit, saying some of the recent rise in bond yields were unwarranted and that the ECB must push back using the flexibility embedded in the bond purchasing program. Traders would also make a sense of marked differences in the tone between the ECB and the Federal Reserve. Richmond Federal Reserve Thomas Barkin said on Monday, this uptick in long-term yields so far seems to suggest an adjustment to the stronger growth and inflation outlook. Atlanta Fed President Bostic said last week that bond yields remain comparatively low, and Powell had not appeared unduly concerned. Central banks continue to take diverging views on signals sent by the recent rise in yields. The Fed is taking it as a positive signal. And that'll be it. I'll also just take a quick look at gold. Gold's been all over the place recently. Still taking a tough time here for gold. Look at that. Spiked up yesterday up to about 1757, I think it was, before they turned around and fell back pretty hard. With that, we're going in. See Canadian GDP, New Zealand dairy prices, and ISM at 9:45 Eastern. Wow, we are still sliding back. We've even gone sub 120. The euro posted a lower close on Monday, staying within a tight range. Support on Tuesday will be 2010, whereas resistance at 2107. So we've reached that 2010 slightly, but we'll keep it there and a little bit overdone. We'll see how much further they can push it. And we said 2107. A little bit of no man's land right in here. past that 2010. Let's go move on to the cable. Cable closed on the lower end of a relatively light session on Monday. Support on Tuesday will be 38.53. You can see that we're right there right now with resistance at 40.14. Essentially no change. On to the Aussie. So Aussie defended the 50-day moving average on Monday, ending the day positive. Resistance on Tuesday will be 78.08 with remaining support at 76.75. Aussie holding up relatively well. Onto the Kiwi. So the Kiwi posted a doji on Monday, suggesting a temporary bottom. You can see right here. So resistance on Tuesday will be 73.15 with support at 71.89. 71.89. Onto the dollar CAD. The dollar CAD traded in a negative inside day on Monday. Support on Tuesday will be 26.12 with resistance at 27.36. Still kind of in no man's land here still. The dollar peso paired back on Monday as challenges to the 21 area were not sustainable. You can see that pair back here. Support on Tuesday will be 20.45 with resistance at 20.77. We're right there right now at that resistance. I think we could go and change this now to bullish at this point. It has shifted there. On to the dollar yen. The dollar yen continued its upside swing to start the week. Resistance on Tuesday will be 6.92 with support at 6.40. Boy, we're still pushing higher. Still pushing this right in there. Look at that. And right there, you can see that close there. That's where I came up with the resistance. So 692, almost there. On to the dollar index. So the dollar index moved higher on Monday. Moderately higher. Resistance will remain 91.20. We're above that with support at 90.54. I was almost going to push it up here because this is where the resistance would come in right there, 91.51. Not giving it that much faith in this. Once again, it's moved higher, but once again, if compared to what we were at, we should have actually been trading up in there, as I told you, for 92.68. So not impressed in what bit whatsoever in this move in the dollar. We're just basically stepped out of the basement. No big deal. One moment. On to the cross rates. We fell back. We held tight overall. We had our support at 76.08 in case we pull back. And boy, we're still holding up relatively well here. We have not pulled back much at all. 77.93, that still caps it. Support 76.08. The only difference is we're going to move this up to right there. Although it's trading very tight range. Go 76.69. Onto the euro pound. A little bit of stabilization and relatively quiet market. The only difference is for support, the downside, we had 86.36. And it did dip below that. This is actually I think we're pretty much overdone at this point. What we would do is we'll go for the high of this wick, which would be right there, 86.12. And on the upside, it's going to be this close right there, 86.91. And the euro odd, inside day, but look, bit of a turnaround in here. They still haven't necessarily been able to break away on this thing. I don't know if it's going to drop all the way back to here. You can take a look at it on a 2-hour. Right there. $54.13. Yeah, that's where we were looking right here. And if it would get to this wick, I guess we'll still seems quite a bit of a drop if we drop all the way back there. Here's 54.44. Right there, 54.41. And on the upside, that wick right there for today, 55.66. Kiwi kind of holding its own now. Support's going to be right there. Right there, that low. It's going to be 64.77. A bit of a stretch error too also. We'll just go with yesterday's low, 64.95. And resistance is going to be this level right there, 66.80. and Aussie Yen. It's going to be this top wick right there, which is going to be 83.40. And support this little wick right there. Right there. That'll be the, it's going to be 82.40. Almost too tight, but we'll go with that, right? There. 82.40. And onto the guppy. Things have tightened up quite a bit here in this guppy. Looking on the upside, $48.83. And on the downside, still a chance we can go in and break a little bit lower. 47.45, which I think we may have already had. Nope. And lastly, sterling nod. I've been all over the place here on this sterling nod. It's going to be right there, 78.44. With the upside right there, 79.79. And there's the bias chart. Maybe I want to wait, look at the platinum market. It's weakened on, I don't want to say on the backdrop of gold, but it has weakened here. We're hanging on. Support right now is going to be right there, 1163. And we're just tight as a drum right now. Very, very quiet. This market would actually have to get back up to 1242 to get to nullify the downside. So we're open to moving lower. Immediate support right now is going to be right there at 1163. And we can move down here. This is 1133, but immediate support right now is going to be right there at 1163. And 50-day moving average comes in 1133. Didier wanted to go take a look at the Bitcoin. This is held up pretty well. I thought we were going to make it down to 42. I mean, obviously, we didn't get too far away from that, but still, nonetheless, I thought we were going to take this area out on a basically in a scare right there. Actually, we went right down there to that. Look at that. We went straight down to that level right there, which was 42,997. I thought we might take it out as a little bit of a scare and dip down. But with interest rates calming down a bit, that allowed this market to pare back. Here's that 48. And my thoughts is that if you were there, I would have gone and exit out on a move to there. We actually got above it, and we're kind of holding this area here at 48. That's what Didier was saying is, hey, it's holding at 48. I'd still look for this maybe to break a little bit lower. Did get a little bit overdone up in here. We're kind of holding. I would think we'd break back towards this 46. May not go all the way to 46, but I would think right here. And he said Ethereum. Okay, yeah. You can see right here with Ethereum, and we're looking at it on a 2-hour chart. It's got to get beyond this level. You can see that. Trading very technical. It's almost 1600. That price comes in at 1590. This is probably equivalent to that same area for Bitcoin, but it would need to get above here. And in order for us to make a little bit of a move to the upside, you'd have to get 2 consecutive closes above that 1590 area. That would allow this, you can see where we appeared above it. Of course, it didn't close, but to get 2 consecutive closes, then that means that they've absorbed, they've this level, they're accepting it, and then that would allow us to move higher. The next move then would be right there, 1662. They got to get above 1590. You can see here we've come back down here to this 13,176 on the NASDAQ. And take a look where we stand here on the 30-minute. They basically just stretched them out super thin up in here. And now we've given this back. We may want to come back towards this, try and come back here to this 250, and then we may end up rolling back down. We'll see. But a lot of headway that came in here. But despite that being said, they were squeezing people up into this area, and finally things kind of quieted down. And take a look at the ES on a daily. Saw a pretty good move off of that 50-day moving average. We're coming down here. Same thing with the NASDAQ. And take a look at copper. Pretty good little pullback off those highs. But that'll be it. And thanks for joining us here on the European Crossover webinar. And we'll see you in the chat room.